Thomson Reserve, this upcoming new launch, is it really too expensive, or are we actually reading it wrong? I want to talk to you about two things. First is the entry price. Second is the future buyers. Of course, in between, there will be like 5 concerns which I want to address to you. Then after which, at the end of the video, I will mention to you what is the entry price, what is the walkaway price, and what is the price that you can actually take a serious look at it. And not forgetting, your future buyer, always take in, if let's say you are an investor or plus own stake, it is very important to identify who is your future buyer. Let's take a look. Let me give you an overall view of this Thomson Reserve. It is the former Thomson View condo. Of course, it has a few key areas whereby it is a consortium. It is by the developer UOL SingLand and CapitaLand. So pretty heavyweight. The target launch is about in October, and there is strong connectivity to the MRT station like the Bright Hill, the Upper Thomson, the Marymount. In fact, 3 MRT stations. What makes this condo unique is that it is within 1 kilometer of Thomson Primary School. It is beside the Marichy Reservoir, whereby end of the day you're tired, you can actually go and take a look at the nature. It is a mega project, 1,240 units, and the land cost is 1,178. Why is it important to know about the land cost? Later on, I will show you why. Now, here are the 5 concerns that you may have and what the data actually says. Number 1, the launch price is just too high. As I mentioned earlier, the land cost is $1,178. So you plus all the construction costs, all the marketing, financing costs, and the risk buffer, everything add up, right? The break-even price for the developer is about $2,200 to $2,400. And you need to know that because they are developer, they need to earn, right, the margin. So you need to cater in about 20%. It's pretty safe. So the launch estimated price should be $2,640 to $2,880. Now, doesn't mean that they launch at this price means that it is a entry price. It is a good deal. That's why I'm walking through with you what is a fair entry price. If the price they launch is too high, cannot be helped, walk away. If they launch at a fair value, fair price, then it is something that you do not want to miss. Let's do a comparison between Parktown Residence and Thomson Reserve. Why these 2 condos, right? I mean, one is the OCR, the other one is RCR. There's no link. The only link is that they are by the same developer. Look at Parktown Residence. The average launch price is $2,360. So the difference between the land price and the launch price is about 166%. Therefore, if Thomson Reserve and RCR, the estimated launch price is $2,500 to $2,600. The difference is about 117%. That is pretty low. That's why if the launch price is about $2,500-ish, I think it's a grab, it's a no-brainer. You must also understand that RCR and OCR price gap has been narrowing. In the past, in 2016, that is about 10 years ago, the difference between the RCR and OCR, the price gap is about 27%. So now, it has come down to 17%. It means that the OCR price is actually catching up to RCR price. In other words, the RCR price is quite reasonable in the sense that it is not like 27% higher like in the past 10 years ago than the OCR price. Number 2 concern, the appreciation will be slow. Now we can't base on our gut feel feeling, right? We must base on data because historical data doesn't lie. Let's look at the transaction that passed. For the past 15 transactions, we tracked between Jadescape, the Bukit Timah Link, the Shun Fu Road area, right? You look at 2025 to April 2026. Annual appreciation is about 12.9% to 4.9%. This shows what? The bigger the square feet, the higher the return. But of course, need to take into account the affordability. If you can see from here, right, in the past data, this is real appreciation, it's not theoretical. So for a 1,141 square feet of 3-bedder, the total gain is 200,000, 8.2%. Over how long? Over a span of 19 months. Let's look at 1,055 square feet. The total gain is 294,000, 12% gain over 24 months. The other 1,012 square feet. The total gain is 282,000, 12.5% over 2 years. Now, you may be curious, who is the nearest or the closest competitor to Thomson Reserve? I would say Gypsgate is the closest competitor to Thomson Reserve, not Thomson 3. Why Gypsgate? Because it's, number one, it's newer. Number two, it has a comparable size of 1,200 over units. Bear in mind for Gypsgate, the annualization is about 5 to 6% so far, and it's pretty decent. The only thing is that Gypsgate is not near Itong Primary School, right? Is primary school a concern for future buyer? Think about it. Yes, maybe 1 or 2 blocks are, but most of the blocks are not. It's something that you want to consider as well. And plus, who is the developer for Gypsgate? It's by Qingjian. Would you prefer a developer is Qingjian, or do you prefer a developer who is a CapitaLand UOL? Number 3, the third concern that you may have is Thomson Reserve. Crazy, 1,200 over units. Are there too much supply at the TOP? Take a look at this information. Right, it's very interesting. That time during Gypsgate, right, the same worry, the same concern was raised that the supply will flood the market when Gypsgate actually TOP in 2022. But this really didn't happen. The prices keep climbing up after TOP. So since the launch, the price appreciated 52%. That's crazy. As I mentioned, the annual compilation is 5.5 to 6%. So if you look at the timeline, in 2018, when Gypsgate was launched, it was launched at 1,526. Is it cheap? Super cheap. That was back then. Well, if you think that right now Thomson Reserve is so crazy, launching at maybe 2006, 2007, you think it's very expensive? Maybe 5 years down the road, you find it very cheap as well. So when Gypsgate actually TOP in 2022, as I mentioned, the same supply worry was raised because there's 1,200 over units. But what happened? The price keep on rising. And now, for Gypsgate, the average PSF is 2003 already. Number 4 concern, I know what you're thinking. The Cross Island line, has the price already been factored in? Whenever condos are built near the MRT station, you can see the trend nowadays. Government is trying to build up the infrastructure of the MRT station, then after which they release the land for bidding. So they want it to be next to the MRT station. They want to build the infrastructure to hype up so that they can actually command a higher land bidding price. And this plays pretty well. You can see that although, yes, the Cross Island line has been already announced and the price has been already factored in, I would say that is only 50% of the price increase. The other 50% will come in after the MRT, the new MRT line is in operation. That is in 2030. And bear in mind that this is a unique project for Thomson Reserve because it sits on a triple line interchange, whereby there is a Thomson East Coast line, there's a Cross Island line, and plus the Marymount Circle line, which is already in operation. So there are less than 15 condo projects that hold a 3-line interchange status. And Thomson Reserve is one of them. I know what you're thinking. That comes the 5th concern that you have. What if Thomson Reserve is another Thomson Grand? I know what you're thinking. Let's do a comparison between Thomson Reserve and Thomson Grand in that case. Well, it is not the same story twice. Why Thomson Reserve is not Thomson Grand? Because Thomson Grand, number 1, there's private lift lobby on too many units, right? Making it not efficient, not usable, and it's too expensive. Number 2, Thomson Grand was launched pre-TLE line, so there was no direct MRT access at the launch. Number 3, Thomson Grand was a smaller scale, thus the liquidity is smaller. Think about it. Actually, the bigger the project, the mega the project, the better the profitability. What drives the price upwards is that there are transactions, there are volume. The higher the volume, more the transaction, the higher the price you will command, because every seller wants to outbid the previous transaction, wants to be the highest. So that's why when there is a lot of transaction going on, they keep on rising and rising. That is very common. As I mentioned, right, earlier in the video, right, I talked about the entry price and the future buyer. That is like a hamburger, look at it this way, that is the bread. In between is the meat, whereby I address the 5 common concerns that you may have. Right, the bottom is the bread again, which I'll come back to this entry price plus who is your future buyer. So this make up the whole hamburger and you can eat it like this. So what's interesting is that what is your entry price, what is your walkaway price? Let's take a look at that. Based on the calculation, I think a clear buy is that when developer really fang shui, make it really easy for us and launch at below 2005, I think it will be 100% sold if they do that. Well, a fair entry price is when they launch between 2005 to 2650. I think it's reasonable because when you compare to Jetscape and Parcel A, it is pretty a fair entry price. Well, the most likelihood of the price launch will be 2650 to 2008. Now that's when you need to be selective on the units and you need to justify what are the units that can command such price. Bear this in mind, which is very important. You must understand that Thomson Reserve is a very good project, but it doesn't mean that all the units in a good project will make money. It's the same with other good projects as well. Not all the units in a good project will make money. It really depends on the layout, the facing, and the entry price as well. And this is something that's important. What is your walkaway price? I think anything above 2008, you are like paying for the hype and not the value. There will be cheaper alternatives that exist. A 3-bedder quantum is likely to fall in the range of 2.4 million to 2.85 million, depending on the stack, the floor, and the view. And why am I sharing this with you? Because I do not want you to overpay for the entry price, and in the end, what happened? Your gain is so little and you wasted like 4 years of your life in a sense because of SSE, right? Instead of that, you could have other better alternatives like the resale market as well. It can command even higher capital appreciation. So it really depends what is the entry price that when the developer actually launch. Who is your future buyer? Which is very important. According to the news, there's 2 prime projects in Bishan, Bukit Merah, whereby 7,000 flats are going to launch in June, the BTO exercise. So you must remember, BTO is the best way for couples to make their first portfolio. And usually, after MOP, you'll be able to sell and take the profit. That is when these are your future buyers. If you look at this, one of the latest article in June 18 this year, Ang Mo Kio Plus, Bishan Prime, Bukit Merah Prime, all these are the new BTO launches, and there's quite a lot. So not to worry about there's nobody is going to buy your unit, but because there are so many new BTO buyers, HDB upgraders are your best future buyers. Of course, there will be landed owners who also want to do a right sizing to a condo. Of course, if you want to have a chit chat session with me, feel free to contact me at this number 8062-1538, and I'll be happy to share with you all my insights and answer all your concerns and queries. Of course, not to worry, I won't bite.